Okay, again, thank you for joining us. My name is Cooley. I'm the Targeted Outreach Director for the Department of Financial Protection and Innovation. Today, here with me, I have Scott Filter from the Consumer Financial Protection Bureau and Amy Sulata from the Student Borrower Protection Center, who is going to help me with this webinar. This is our Public Service Loan Forgiveness Workshop webinar, and we will get started right now. Okay. First things first, this webinar is being recorded. It will be published on our YouTube channel. Your microphones all have been muted and your video has been disabled so that there's no too much distraction. However, if you do have a question, please submit it through the chat. We have a dedicated section at the very end of the webinar to address many of the questions that you submit through chat. We're probably not gonna have time to go through all the questions, but I have a staff, I have a team that is going to go through them, figure out the most asked questions or the ones that we can actually answer. And again, we will answer those at the end of the webinar. Please submit it through the chat. Thank you. Okay, so now we have Scott Filter from the Consumer Financial Protection Bureau. Take it away, Scott.
Thanks, Koo. Hi, everyone. As Koo said, I'm Scott Filter with the Consumer Financial Protection Bureau, and we'll start with the Bureau standard disclaimer here. This presentation is being made by a CFPB representative on behalf of the Bureau. It does not constitute legal interpretation, guidance, or advice of the CFPB. Any opinions or views stated by myself are my own and may not represent the Bureau's views. Next slide, please. Thank you. The CFPB is a 21st century agency that helps consumer finance markets work by making rules more effective, by consistently and fairly enforcing those rules, and by empowering consumers to take more control over their economic lives. I'm from a division in the CFPB that focuses on helping consumers navigate financial products and services. We serve the general public, but also focus on a series of special populations, including service members, older Americans, traditionally underserved communities, and students and young consumers. We help students and young consumers to prepare for financial decisions, such as paying or saving for college, managing money, building credit, and of course, repaying student debt, all with an eye towards preventing student loan default or other negative financial events. So what is the PSLF program? The Public Service Loan Forgiveness, or PSLF program, was established to encourage individuals to pursue careers in public service. Those who choose to work in public service often face substantial financial hardship and may not be able to repay their student loans over the standard 10-year repayment period. And so this program was designed to help those individuals provide a service to the public and help them satisfy their student debt repayment obligations. The PSLF program will forgive certain federal student loans if an individual makes 120 qualifying payments while working full-time for an eligible employer, and then complete a small application process. Next slide, please. Now, on October 6th of last year, the Department of Education announced for a limited time that borrowers can receive credit for past payments that would not have otherwise qualified for PSLF. Under this limited waiver, individuals can receive credit for any past payment, regardless of the type of loan you had, the repayment plan you were in, or whether that payment was made in full or on time. You can receive forgiveness through PSLF even if you are no longer working for a qualified employer at the time of your application for forgiveness, or when you actually receive that forgiveness. Now, this is truly a time-limited opportunity, and it expires October 31st of 2022, so just in a few months. To receive credit for past payments, you must take action prior to that deadline. Your next steps will depend on what type of loans you have, and if you're unsure of what type of loans you have, you can log into studentaid.gov, which is the Department of Education's website, to find out more information on your loans. All of your federal student loans will be listed after you log in with your username and password, and you will need to know what type of loans you have before you can move on to the next step.
Interesting. That's a pretty great opportunity to take advantage of this. Scott, what happens after November 1st?
On November 1st, unless the department extends this waiver, all borrowers would have to go back to those original requirements to qualify for PSLF, which means that they have to have that right type of loan and be in that right type of repayment period plan that we'll be going into, as well as making those 120 on-time in full payments while working full-time for a qualified employer. The other important thing to note is also at that point, you would no longer be able to receive any type of back credit for payments that you might have missed or paid less than the full amount for. So it's important to get all those necessary forms in by October 31st of this year.
Thank you, Scott.
Now, the PSLF program was signed into law in 2007 with the College Cost Reduction and Access Act of 2007. So it's important to know that you can only get credit for payments that go back to that point. And then, as we just mentioned, of course, on October 6th, under authority from the CARES Act, the Department of Education announced new flexibilities through the limited waiver so you can get credit for payments that normally would not count. The deadline requires that you submit any paperwork needed for that by October 31st, which I cannot emphasize enough. And this means that if you need to consolidate your loans, that direct consolidation loan application must be submitted along with any PSLF forms by that deadline.
So Scott, will my PSLF form still be processed after the October 31st deadline?
As long as you've submitted all the paperwork by that deadline, there's a chance that they may not get to it before that deadline based on how many people would probably take advantage of this. So as long as you submitted it by that deadline, you're good. They'll process it afterwards if they don't get to it in time before that deadline.
Okay, thank you, Scott.
So let's talk about what the actual qualifications are for the PSLF program. There are essentially 4 requirements to qualify, and that's that you have the right type of loan, you have the right repayment plan, and the right employer, and then 120 payments while meeting these other requirements. And we'll go into more details on each of these requirements over the next 2 slides. Next slide, please. So the first requirement is that for PSLF, you must have the right type of loans. And that is specifically, you must have federal direct loans. So this means that if you have private student loans or federal loans that were refinanced into a private loan, they will not count for PSLF, even under the limited waiver. Now, if you have a different type of federal loan, such as a FFEL program loan, which is also known as the Federal Family Education Loan Program loan, or a Perkins loan, you would not normally receive credit for PSLF. And if you even consolidated traditionally, you would normally lose payments that had been counted towards PSLF. However, under the PSLF limited waiver, you can consolidate those loans into federal direct loans and then still receive credit for your past payments. Now, traditionally, Parent Plus loans do not qualify for PSLF because they do not qualify to have an income-based repayment plan. However, you can consolidate them into a direct consolidation loan to qualify for PSLF. Parent Plus loans are not eligible for the limited waiver, though. But if you are interested in pursuing PSLF for a Parent Plus loan, I encourage you to contact your student loan servicer to walk you through the process of consolidation for the Parent Plus loan. I would also note here, though, that the employment requirements for PSLF for a Plus loan is attached to the borrower. So the parent whose name is on that Plus loan would be the one to have to meet the employment criteria to qualify for PSLF.
Pretty interesting here. Does my loan consolidation have to be completed before submitting my PSLF form?
No, and in fact, I would not wait for that to be done before you submit the PSLF form, just in case it gets close to that October 31st deadline. Generally, I still recommend doing the consolidation loan application first, or right at the same time that you submit your PSLF form. That way, if they do process that form, they see that you have multiple loans that account will need to be applied to, rather than finding out later on that they've already applied account to certain parts of your loans, and then you consolidate, and then that would miss out on some of the actual accounts to be received for PSLF. But as long as you do it relatively close together, they'll see you have the consolidation loan and process that first. And again, that deadline for all of those forms together is October 31st.
Okay, thank you, Scott.
Now, under the traditional requirements to qualify for PSLF, you must be in an income-driven repayment plan, which is one of 4 different plans. And those are the Income Contingent Repayment Plan, or ICR, the Income-Based Repayment Plan, or IBR, the Pay-As-You-Earn Plan, which is sometimes called PAY, and the Revised Pay-As-You-Earn Plan, which is called REPAY. Now, collectively, these are all known as the income-driven repayment plans. And it's important to note that sometimes when you're an income-driven repayment plan, you can qualify for what's called a $0 monthly payment. And it's important to note that that's different than being in deferment or forbearance. And these $0 monthly payments do still count regularly towards your PSLF requirements as an on-time payment. So you have nothing to worry about or be concerned that you're not receiving credit for that $0 payment. Now, if you're not currently in one of these repayment plans, consolidating your loans will allow you to select one of these repayment plans, and then during the limited waiver, you can still receive credit for the previous payments that were in an incorrect repayment plan.
So, Scott, how do I find out if my current repayment plan is qualified for the public service loan forgiveness?
Your plan should be listed when you log into your student loan account with your loan servicer. If you have any problems doing that, or you're not sure who your student loan servicer is, you can always find out by going to studentaid.gov to get that information. And then I always recommend that if you have any questions about what payment plan you're in or how to switch repayment plans, call your loan servicer because they'll be able to provide you with the most accurate and up-to-date information on your account.
Okay, thank you, Scott.
Sure. And now let's move to talk about what a qualified employer is. Any federal, state, or local government or military service is considered qualifying employment, along with any nonprofit that is a 501c3 or an organization that is providing certain types of qualifying services. Now, it's important to know that it only matters that you work for a qualifying employer. It does not matter what you do for them. For example, if you work for a public school, all of those employees for that school qualify for PSLF, whether you're the administrator, an assistant, or a classroom teacher. Now, the other thing to keep in mind is that you need to work full-time, and that means that you must meet your employer's definition of full-time employment, or you must work at least 30 hours a week. Now, if you are employed in more than one qualifying part-time job at the same time, you may meet the full-time employment requirement if you can work in a combined average of at least 30 hours per week with your employers.
So, Scott, does employment with like a political organization or employment as an independent contractor also qualify?
For different reasons, unfortunately, both of those do not count for PSLF. Political jobs have a unique purpose that was ruled out of counting for the need of what they were looking to do with the PSLF program. Independent contractors are a little bit trickier because it's possible that you're working as an independent contractor for a qualified employer, but since you're receiving a 1099, that means specifically that you're not an employee of that organization, and therefore you would not count for PSLF.
Okay, interesting. Thank you, Scott.
Now, traditionally, for a payment to qualify for PSLF, it must be a payment for the full amount due, made on time, which is defined as no later than 15 days after the payment due date. Also, you could prepay a lump sum and get credit for payments up to 12 months in advance from when you recertify your income-based repayment plan. During this limited waiver period, you can still get credit, though, for some of the payments that miss these criteria. So if you previously submitted a PSLF form, there's nothing you need to do to get credit for these past periods. The Department of Education will go back through and give you credit for those late payments or those partial payments that we talked about earlier. However, if you have not previously submitted a PSLF form, you do need to do that so that they know that you're interested in taking advantage of PSLF, and we'll go back and then review your past payments. Now, during the recent payment pause that the Department of Education began and was codified by the CARES Act, payments that you would have made during this time, which would have been back to March of 2020, will count for PSLF so long as you maintain full-time employment for a qualifying employer during that time. However, if you've had some sort of reduction, time below full-time, a temporary layoff, or you retired during that time, it does mean that you will not receive credit for those periods of employment where you were not meeting that full-time employment requirement of the PSLF program.
So Scott, quick question here. What if I missed a loan payment in the past?
Traditionally, and this is the great thing about the PSLF program, your payments do not have to be consecutive. So you could make 6 years of payments, miss one entirely, and it does not stop you from getting full credit for those 6 years of payments that you've had in the past. You just pick up and start again, and you may miss that 1 month of payment, but you still get to continue on with 6 years plus 1 month with your next on-time payment plan. And then with the limited waiver, the good news is they'll go back through and look at all your payments to give you credit for anything within regulations, such as those late payments and partial payments that you made, so that you can get full credit from there. And there's nothing you need to do for that.
Thank you, Scott. I do want to remind all the borrowers out there that you can contact your student loan servicer to get a history of your payments and make sure that they posted those payments on time for you. Thank you, Scott.
And now just to review a little of the information that we just went over, because it's always good to hear it more than once. You can receive credit for FEL or Perkins loans for the PSLF waiver if you consolidate them into direct loans. You can receive credit for any payments made, even if you were in an incorrect payment plan. You can receive credit for certain periods of deferment and forbearance. And to qualify for the limited waiver, there are only 2 things you need to do. Submit a direct loan consolidation application for any federal loans that were not already direct loans, and then submit a PSLF form for periods of employment that you want to get credit for that you've not already submitted a PSLF form for. And then most important, these deadlines deadline for these forms is October 31st, 2022. So make sure you don't wait to submit them.
Okay, thank you, Scott. That was Scott from the Consumer Financial Protection Bureau helping us out with a lot of background information about the PSLF waiver. Next up, we're going to have Amy Sulata from the Student Borrower Protection Center, who's going to help walk us through the process for applying for the PSLF waiver, also the going through the PSLF form. So, hi, Amy, please take it away.
Hi, everyone. Thank you all for having me here today. My name is Amy Salata, and I'm the Outreach and Advocacy Manager at the Student Borrower Protection Center. And just a short background on who we are. We are a national nonprofit policy organization that focuses solely on alleviating the burden of student debt in the country. And we do this through a mixture of policymaking, advocacy, and litigation strategy to rein in industry abuses, protect borrowers' rights, and advance economic opportunity for the next generation of students. So let's talk about applying for PSLF with the PSLF help tool, and then we'll also review consolidation as well. So first, you'll want to log in to studentaid.gov and find the PSLF help tool. That can be available at studentaid.gov/PSLF. But I'm just mentioning studentaid.gov generally because that's going to be your clearinghouse for most of this, or for all of this information. This is the federal, Department of Education's website, and so this will be the place that you should go to look for the most up-to-date information for all of this, this PSLF stuff. So first, you'll log into this website.
So, Amy, what if I don't have a login, or if I've never created an account with the studentaid.gov?
So if you don't have a login, there is a way to reset your password to get access. So that's what you should do if you're having any issues logging in. But you'll need to log in order to access the PSLF help tool, which will be your application.
Okay, thank you, Amy.
Of course. Okay, so checking that your employers are eligible is the first step in the PSLF help tool. So you can check your current employer and also your past employers to make sure they're eligible. And as Scott mentioned, let's just review that any government employer is an eligible employer. So that includes federal, state, local, or tribal governments. And then also any nonprofit with a 501c3 tax exempt status is also eligible. And then certain other nonprofits, depending on the work that they do, are also eligible for PSLF. And it matters who your employer is, not what your role at the organization is. So it just matters who's on your W-2. It doesn't matter what your title is there, just that you work for a qualifying employer. So you can use this tool to look up all of your past and current employers, for PSLF, and you can input your employer identification number and then also your dates of employment to check that they are qualified. One thing I want to mention here is that this list, this database is not necessarily exhaustive. It's possible that you could look for an employer and find out that they are not listed when you run the search. This is okay. You can still proceed with the process, especially if you know if you're eligible. If you are working for a government agency or a nonprofit agency with a 501c3 tax status, you know you're eligible. It could be that no one else from that organization has ever sought PSLF in the past, and that might be why they're not appearing when you run the search. So I just want to mention that in case that's the case for anyone here, especially if you worked at a very small organization or something like that. And so this is how you will be able to access the PSLF form, by looking up your employers first.
Thanks, Amy. Couple of really quick questions here. What if the organization that I used to work for is no longer in business? And where can I find the employer identification numbers?
Oh, those are great questions. So if your employer is no longer in business, or if they are refusing to sign your PSLF form, there is a box to check on the PSLF form itself that this is the case. So there are workarounds to those situations, especially if a nonprofit closed, or if your employer was so long ago that they don't know who you are and they're refusing to sign the form. There is a box to check that this is the case and that you can move on from that. And then to find your EIN, you can look at your W-2. You could ask your employer, or if it's a very large employer, sometimes you can just Google them and find out your EIN. Okay, so here's some more employment details on the PSLF form. So remember that your employment status needs to be full-time, which is 30 hours a week, or whatever your employer deems as full-time if it's greater than 30 hours a week. You can also qualify for part-time work if you work at multiple part-time jobs. So say you work for a government agency for 10 hours a week, but then you work for a nonprofit for 20 hours a week. That adds up to 30 hours, and so you would also qualify. And then here's another, here's the section again on, if your organization is closed, you can check this box here, and that will also show up on your PSLF form once you print it out. And so that again is like the workaround that you can do if you can't get a signature on it.
Thank you, Amy. Quick question here. So for the military or veterans, how can they certify employment if they can't get a signature or contact their former commanders?
Yeah, this is a great question. So actually in April, this is a newer development. In April, the Department of Education has stated that they are going to accept DD 214s as proof of military service, so that so service members can get credit for the military service that they did. And I also just want to mention very quickly that if you can't get a signature on your form and you click no here, or you put no on your form, the Department of Education could come back and ask for more proof, such as a W-2 from that period of time that you were working for this organization that isn't signing the form. So that is possible that they might request more information from you if you can't get a signature, but there is an option to do that.
Awesome. Thank you, Amy.
Yeah. Okay, so on the PSLF help tool, there is a question about whether or not you've made 120 qualifying payments. We have noticed that there are some glitches with the PSLF help tool, and this is one of them. So we want to make you aware before you use it so that you know. If you've made over 120 payments on a direct loan for the PSLF program, it might not let you choose that option. It might not let you click yes that you've made 120 payments. That is okay. Just move on. Don't worry about this question. You can click no, that you haven't made 120 qualifying payments, and submit the rest of your application. don't let this question hold you up from, getting the benefits of the waiver, especially since it's time limited. Either way, whatever you choose of this question, your account will be reviewed in full by the Department of Education. So that's really important to know moving forward.
That's great information, Amy. I'm sure some people have gotten caught up in here. So just to repeat, even if you've made 120 qualifying payments, or if you haven't, clicking on no means that the Department of Education will still review your form, PSLF form, regardless. Okay,
yes,
great.
thanks.
Amy.
Okay, so this is the end of the process for the PSLF help tool. So you'll want to download the PSLF application form, and then to submit your form, you you'll again have to sign the first page. There's a spot for you to sign, and then however many employers you are trying to get service for, you'll need to have that many employers sign the forms for you. So you'll get one form per one employer, and then you'll have to have all of them sign that form, and then you'll submit it. You'll submit it to either Fed Loan Servicing if you already have Fed Loan. If you already have a direct loan and Fed Loan Servicing is your servicer, you can upload it to their website. You could also mail it to the Department of Education, Fed Loan Servicing through the Department of Education, and then you could also fax it. If you're concerned about the form getting there, you could also do all three of these things to ensure that it gets there. So remember, and then it's always a good idea to keep records of all of the materials that you have on your PSLF application, so that if there is an issue, you can go back and prove that you have all of the PSLF forms that you need in order to get the maximum benefit that you qualify for.
Thanks, Amy. So when you have your employers sign their section of the PSLF form, is that the same as an employment certification?
Yes, this is a great question. So the PSLF form is the form that your employer needs to sign, and that is how you certify your employment. These forms were previously called employment certification forms, or ECFs, but now they're called PSLF forms to make it a little bit simpler to say and to work with. So yes, so when you have your employers sign the forms and then you submit those forms to Fed Loan Servicing, that is certifying your employment with the Department of Education.
Thanks, Amy.
Absolutely. So here is an example. This is what this form looks like. So this is a PSLF form. You can see that the borrower works for the state of California. They have all of the information filled out at the top. And then there's a line at the bottom under section 4. That is where your employer will need to sign the form. It's also important to note that this form, was pre-populated by the PSLF help tool. So that's why it's really beautiful. And, you didn't write in anything. But it's important to note here that if your employer, crosses out any information, say the address was wrong and they crossed out the address and wrote in a new address, you'll need to request a new form and have them sign a new clean copy of the form. If you submit it as is with the scribbling from your employer, the form could be rejected right out, or it could delay your process for getting PSLF. And so it's a good idea that if they cross out anything or fix anything at the top of this form, you should request a new form and request that they fill out a new form so that your application doesn't get delayed.
Thanks, Amy. And some information I just want to share some information. It was given to me by the DFPI student loan OBUDS person, Selena Damian. She recommended that for California state employees, so whether you're working with the Department of Financial Protection or maybe the California Department of Public Health, you put down the federal employer identification number 9460137. It's for the entire state of California. I know if you've worked at multiple departments, you're probably going to need different forms for each different department that you worked for, because it's going to designate your start date, your end date, but your federal employer identification number will still be the same for each one because it is considered the state of California. So just information to share. Thank you, Amy.
Thanks, Koo. And actually, just one more note here very quickly. So this is the form that you'll have to submit in order to certify your employment before that October 31st deadline in order to take advantage of the waiver, which will get you retroactive credit towards your PSLF loan forgiveness. But I should mention here too that, in terms of submitting your ECFs or your PSLF forms, like we also often get a lot of questions about how often you should do this. And we recommend that you do it every year until you qualify for forgiveness, and then do it again every time you switch qualifying public service employers. And then that you keep your own copies of everything, just to make sure that everything is in place. You don't have to do this. You could submit, not in this case under the waiver, but in general, you could submit your PSLF form after 10 years of employment. But if you do it every year and every time you change employers, it's a great way to catch any mistakes that might be made so that you can address them as they come, so that you're not finding out 10 years after, working for a government agency that you don't qualify because of something, that had gone wrong.
Awesome. Thank you, Amy.
Yeah. Okay, so let's just review the different scenarios here. So if you have a direct loan and you've already certified your employment before, under this waiver period, the Department of Education is going to automatically review your account, and you'll increase the number of credits that you have towards PSLF. If you have a direct loan and you've never certified your employment, you must submit the PSLF form using the process that we just spoke about. So you'll need to do that before the October 31st deadline. And then, of course, if you don't have a direct loan and you have maybe an older FFEL loan or an older Perkins loan, you'll have to consolidate before the deadline, and you should consolidate first, and then you should submit your PSLF form so that they see that it's a direct loan and that you qualify on the loan front, and then they'll review your employment. So just remember those 3 different scenarios and what you can do to take advantage of this waiver process.
So does my loan consolidation have to be completed before I submit my PSLF form?
Yes, it should be. You should complete the consolidation before you complete the PSLF forms for your previous employment. Yes.
And how long does that loan consolidation usually take?
So that loan consolidation usually takes just a few weeks. I would say maybe 4 weeks tops. There's a timeline for the consolidation that's much more well known than the timeline for receiving PSLF forgiveness. The consolidation generally might take up to a month, but with the PSLF forgiveness application under the waiver, that could take anywhere from a few weeks to a few months. It really just depends on the department's ability to review all the applications, and they also do them in batches. So there's no exact timeline for when you might receive notice that your application has been approved.
Okay, thanks, Amy.
Yeah.
Okay, so now we're going to talk about consolidating your loan. Amy, again, was going to walk us through the process.
Excellent. So again, you'll need to log into studentaid.gov. This website will be your best friend by the end of this process. When you log in, you can see that on your student aid dashboard, you'll be able to see what type of loans you have. There's a better screenshot on the next page, but it'll look somewhat like this, and you'll be able to view the details of your loans. In addition, if the dashboard isn't enough information for you, you can also download all of your aid data, and you can see how to do that on this slide. So you can download all your aid data, and then you'll get a granular version of this information as well. So here you can see your loans listed out. We can see here that this person already has consolidated their loans, and they already have direct loans because it says direct consolidation unsubsidized and then an amount, and then direct consolidation subsidized and an amount, but they're both direct loans. And you can see that previously this person had other loans that were not direct loans. So the Graduate Plus loans, the Perkins loans, and these loans that are underneath the main loans at the top. So, if you don't have direct loans, you'll need to consolidate. So this is where, you first can look to see if you have direct loans, and any loans that do not say direct next to them need to be consolidated in order to take advantage of the waiver. Okay, so to manage the application process, you're going to want to go to Manage Loans in the top toolbar. And then in the drop-down menu, you'll click on Consolidate My Loans in order to consolidate them.
Amy, quick question. Can you access the Consolidate My Loan feature or repayment options without logging in?
No, you'll need to log in. And so that's another great point. If you don't have your login information, again, you can reset it, but you'll need to be logged in order to consolidate your loans. Okay, so then you can access the consolidation application here. Here it's already prompting you to log in, so you'll know that you need to log in to start the consolidation process. But this is what the first page looks like. So then it'll guide you through the steps that you'll need to take, which includes selecting the loans you'll want to include in the consolidation, confirming the amount and rate of the new loan, the interest rate of the new loan, selecting your payment plan and servicer, and then signing for the loan. Here is a tip specific to the waiver. If you have a mix of older and newer loans, so some would be closer to the 10 years needed for forgiveness under PSLF, if you consolidate all of the loans together, the new loan will be awarded as much credit as your oldest existing loan. So if you consolidate old and new loans, when the loan is forgiven, the entire amount will be forgiven because you consolidated them together. So this is really useful for folks who have older FFEL loans, but also have newer direct loans. You might not think to consolidate your direct loans because they already qualify because they're direct loans. But if you do consolidate them, they could be forgiven on the same timeline set by the older FFEL loans. And then just also to mention on this slide too, when you're selecting your new loan servicer, it's a good idea to choose MOHELA or to choose Fed Loan Servicing if it lets you. So Fed Loan Servicing is the exclusive servicer for the Public Service Loan Forgiveness Program. Some of you may already have Fed Loan Servicing as your servicer, but it was announced earlier this year that MOHELA will be taking over that portfolio because Fed Loan Servicing is exiting the student loan market. So it's a good idea to choose MOHELA as your servicer when you're doing this process to ensure that your forms get to the right place when you're doing this application.
Okay, thanks, Amy. Good, really good question. I do want to repeat that. So if you are right now thinking about consolidating your loans, you should probably select MOHELA as your federal loan servicer, right?
That's right. Yep.
Okay, thank you.
Sure. So then during this process of consolidation, the help tool will also have you choose your payment plan. So remember that for the regular PSLF program, it's a good idea to be enrolled in an IDR plan, an income-driven repayment plan. So when you're consolidating, it's a good idea to pick an IDR plan as your payment plan. And just to reiterate what some of these names go for these plans are like the income-based repayment or IBR, income contingent repayment or ICR, pay spelled P-A-Y-E or repay spelled R-E-P-A-Y-E. And these payment plans are all different within income-driven repayment. And there is a repayment calculator tool, this repayment estimator tool that can help you choose the plan among these four that is the best for you. Everyone's situation will be different. And I should mention too that there are different guidelines for married borrowers who file their taxes separately than married borrowers who file their taxes jointly. So it's a good idea to really look at this repayment estimator to find out which plan will be best for your particular situation.
Awesome. Thank you, Amy. So basically all the repayment plan information that's listed there, is every one of those eligible for PSLF?
No, so listed here we have standard, graduated, extended fixed, extended graduated, and then at the end you'll see revised pay as you earn, and this person wasn't eligible for that plan. So these payment plans generally don't qualify for PSLF. The standard payment plan does. However, under the standard payment plan, you'd be paying off your loan in 10 years anyway. So under an income-driven repayment plan, you'd have a lower payment each month, but still achieve the same goal. So that's why we recommend this. But also in general, this is just general information that income-driven repayment plans will always qualify. Of course, there are different situations for different people, and so there is a chance that a standard repayment plan might be better for you. But generally, you want to be on an income-driven repayment plan.
Okay, thank you, Amy.
Sure. Okay, so let's just go over some important takeaways here. So remember that credit will be given for any months during which any loan type was in repayment status. I want to also mention here that in April, the Department of Education announced an IDR account adjustment in which they will be doing a count and audit of all IDR payments since you began repayment, and this will affect your PSLF payment count. So they are, through this IDR account adjustment, they are counting sometime in forbearances. So if you spent 12 consecutive months in forbearance or over 36 cumulative months in forbearance, that time will count towards PSLF. And also if you were in deferment before 2013, that time will also count towards PSLF credit. So that's a different thing that happened, right? The IDR account adjustment, but I just want to mention it here because it will grant people more credit. Remember that the deadline to apply is October 31st of this year. And by that deadline, you'll have to consolidate and submit your PSLF forms. Confirm that your employer is eligible using the PSLF help tool. Confirm your loan types. And if you don't have a direct loan, you'll need to consolidate them. So consolidate your loans if necessary. Submit PSLF forms for any qualifying employment that you've had since October 1st, 2007. And then certainly if you experience any issues, you should file a complaint either with the California State Ombudsperson or with the Federal Student Aid Ombudsperson as well. But thank you so much for having me, and I hope this was useful for you all.
Thank you, Amy. That was Amy Sulata from the Student Borrower Protection Center. A lot of really great information. Thank you for walking us through the entire process. They will return to Amy, and Scott will be here to answer some questions from the chat at the very end. But for now, I do want to highlight some important resources that we've collected for you. Again, these slides will be made available after the webinar. Also, the webinar is being recorded and it'll be posted on our YouTube channel. Just going to go through these bullet points really quickly. The DFPI has set up a student borrower resources webpage. A list of the past webinars, including this one, will be on that webpage. Also, there's a incredible list of resources from government agencies, nonprofit organizations, legal firms, community-based organizations that help students. There's a directory at the very bottom of the page. No matter what situation you're in, there's definitely someone out there, an organization out there that can help you. Also, we've provided a link to the Department of Education's frequently asked questions on the public service loan forgiveness waiver. There's also a link there to go directly to the PSLF tool. Also, and a reminder, if you do have any questions or need more information, you should be able to contact your student loan servicer to find out information about your own loan. Again, as Amy said, there's a student loan ombudsman for the Department of Education. You could also contact the Consumer Financial Protection Bureau. And the DFPI has a dedicated student loan ombudsperson, Selena Damien. Her email address is there. You could always contact her with your specific information as well. Finally, I do want to go through some frequently asked questions. These questions we received through the registration process. Many of you submitted questions. We combined them when you registered. And I do want to run through some of these. Amy and Scott, please feel free to jump in with more information on these questions if you do see that I miss anything. So first question, does COVID forbearance time count as a qualified payment? So the answer is yes, so long as you've been employed or working for a qualified employer, which is a 503C. So as long as you've been employed during that time, even if you weren't making any payments during the COVID forbearance, that time counts as you get credit for that towards public service loan forgiveness. Do you qualify for PSLF even if you were on IDR and paying $0? The answer is yes. So if you are on income-driven repayment plan, paying nothing, you can still qualify for PSLF. Again, depending on if you are working for a qualified employer. Is there a limit on the amount of debt that can be forgiven? No. Is there an income limit to qualify for PSLF? No. Do you need to submit an ECF for each employer? So I believe that's an employer certification form, which I think it's now called the PSLF form, and your public service loan forgiveness form or PSLF form should have an individualized page for each qualifying employer. So you might have been working for a nonprofit and then changed to a for-profit organization and then back to a nonprofit. You should make sure to have one form for each of the qualifying employers. You don't need to have one for your for-profit business that you were working for, if that's your scenario. Is there a benefit for those who do not yet qualify to consolidate and apply for PSLF now? So yes, if you get credit for the longest employment and you have have your qualifying payments updated. Scott, Amy, any information to this? Is there a benefit for those who do not yet qualify to consolidate and apply for a PSLF now? I think you have to consolidate. Okay, no, you have to have direct loans. That's the catch.
Correct. Yeah, you do have to have the direct loans. We always recommend that you at least submit forms on an annual basis. It makes it a lot easier as you go through the process to not lose touch with that old job as you're on your way out the door for a new and better job, just to make sure that you get everything in there. And so definitely, like, don't worry that you're not at the 120 payments yet, but go ahead and submit the paperwork now. And you know, you may very well think that you don't qualify for anything under that PSLF limited waiver, but you might. So let the experts at the Department of Education, your loan servicer, review it. Just make sure that you get in that direct consolidation loan application and those PSLF forms by that October 31st deadline.
Awesome. Thank you, Scott. Okay, next slide. Our spousals, I want to say, Amy, this is the federal family.
Federal Family Education Loan.
Yes, consolidation loans eligible. And the answer is no. Also, private loans, private student loans are not eligible for PSLF. And also, if you have, I want to say, refinanced your loans privately through another organization, those are not eligible for PSLF either. Do Parent Plus loans qualify for PSLF waiver? Scott, I think you might have talked about this a little.
Yeah, specifically if we're talking about the PSLF limited waiver, it doesn't count. PSLF is a tricky thing in general when it comes to the plus loans are a little bit tricky when it comes to PSLF because you technically can't have the right repayment plan. So you can't get PSLF until you consolidate them into a direct consolidation loan. It's a bit of a more difficult process. And that's why we recommend you talk to your loan servicer about it, since they don't technically qualify on their own with those repayment plan options.
Okay, thank you, Scott. What will consolidation or loan consolidation do to my interest rate? So all of your loans, the weighted average interest will be rounded up to the nearest 1/8 of 1%. So that happens when you consolidate your loans. You'll be notified on the loan consolidation screen what your new interest rate will be. So just take a note of that. If I let's see, I already have received forgiveness under PSLF. Will I receive a refund? No, you will not receive a refund. I'm sure that if you've already received, if you've completed public service loan forgiveness, like you were granted it, and then you continue making payments, I'm sure the Department of Education will refund those payments afterwards. But if you've been making payments while you have applied for PSLF, I don't think those will qualify for a refund.
Yeah, just a note here as well. If you have, if you eventually get PSLF loan forgiveness, you can get a refund if you've made over 120 payments on direct loans. But if you've made over 120 payments on like a FEL loan or a Perkins loan, that wouldn't get a refund. But yes, if you've made over 120 payments and were approved for PSLF, you could receive a refund for those direct loan payments that you made.
Interesting. Thank you, Amy. Uh,
Can I also jump in with here on a slightly separate topic, which is when the payment pause began with the CARES Act, it took them a while before they put everybody into that payment pause. So you may have made a payment early on in that payment pause that you didn't have to make. And you can get that back by requesting it from your student loan servicer and still get PSLF credit for it.
Interesting. Thank you, Scott. Great information to know. Okay, so do I need to be currently employed at a qualifying employer to be granted forgiveness? So do I need to currently be employed at a qualifying employer to be granted forgiveness? The answer is no. Your past employment is definitely important. And while you're making payments for those past employments, those will count towards the waiver. But if you've changed jobs,
once you hit that 120 mark, then you're good to go. You do not have to stay at that same employer at the point that you later submit that application or you later receive that forgiveness.
Great, thank you. How can I find out how many PSLF qualifying payments I currently have? So you want to make sure you file a PSLF form. Here's an interesting question. What if I have not consolidated my loans? Can I still submit a PSLF form?
So you should consolidate your loans before submitting your PSLF forms. But I also want to note here that if you already have Fed Loan Servicing as your servicer, there should be, and you've submitted PSLF forms previously for your employment, you should be able to see the count of payments that you currently have towards, that forgiveness. But of course, if you're just beginning the process, then you wouldn't be able to know how many payments you have, towards PSLF forgiveness. However, the Department of Education has stated that they are working on a way to have a kind of a tracker on studentaid.gov, I believe. So it is possible that in the future you'd be able to tell your count.
So if you submit your PSLF form to the Department of Education but have not consolidated your loans, will your form just get rejected? What kind of response?
I'll add a little bit in here as well. Our recommendation is to do the consolidation loan first, just so that if they process that PSLF form before they get to your loan application, it's not going to cause problems later on. Now, don't get me wrong, you do not have to wait after submitting a direct loan consolidation application to then submit the PSLF. So if you do them all on the same day, that's great. And we think that's probably the perfect world. But definitely, don't wait too long if you're submitting the PSLF form first to submit that consolidation loan application, because you don't want them to inadvertently reject some of the qualifying payments on parts of your loans because it hadn't been consolidated at that point.
Okay, thank you, Scott and Amy. Last question that we received. What if my PSLF was previously denied? Should I resubmit the application? And I would say yes, you would definitely want to make sure you fix any problems on your form that you submitted. So, as Amy said, on the employer certification section, if there's error there, you want to make sure you fix that. Maybe there's additional information that you didn't include that. But yeah, you could definitely resubmit your application, your form, PSLF form, as many times as you need to.
And I would also just add here, go ahead, Amy.
Yeah, just to add, many people were denied since the inception of the program since 2007 because they either had the wrong loan type or they were in the wrong repayment plan. And so they were denied by their servicers saying, you don't qualify. But this waiver is exactly meant for people who have been denied before the special waiver period to get that retroactive credit. And so you should absolutely resubmit an application under the waiver period to make sure that you get all that credit from your past employment.
And I would just add here, the original guidance that was given to people about this process was that if they've been previously denied, which means they've submitted that form already, that their loan servicer should go back and double check those denials to give them credit without needing that form. So before they even submit that form, I might recommend they contact their loan servicer just to check on that and to see if it's been reviewed again. But it doesn't hurt to do both as well.
Okay, great. Thank you, Scott and Amy. All right, so I do want to go through some questions that we received through the chat. There were quite a lot of questions. Okay, first one, we're gonna go through this real quick, and I do apologize, we're running a little bit late. We did start a little bit late, and if you need to, for our attendees, if you need to drop off, that's perfectly fine. This webinar is being recorded, and it will be published to our YouTube channel later on today. Okay, first question, what steps should someone take if an former employer, public interest organization, doesn't respond to your request to certify your employment as qualifying under PSLF?
Yeah, you can check the box on the PSLF form that says that my employer is either no longer in business or that they're refusing to sign the form. So there is a workaround if you're unable to contact them.
And so there are different ways to certify that your employment using other documentation, right? Thank you, Amy.
That's right.
Okay, next question. Like many people who teach at nonprofit schools, I am an adjunct, which means I don't work full-time. I manage to make a full-time living working part-time for 2 nonprofit colleges. Do you know if the work I do will count? Am I eligible? So I think we've talked about this, Scott.
We did talk about that. As long as all of the employers that individual has as a qualifying employer, and that they add up to at least 30 hours per week, you can receive credit for the PSLF program for that, because you essentially do meet all the requirements. You just have to make sure that both employers are on encapsulated some way on that PSLF form, so that they know that you've worked the full-time hours.
And there is a push, to address this specific issue with adjuncts, particularly because although on paper you don't work 30 hours a week, maybe, you're certainly grading paperwork that isn't counted in that time. And so there is a push to have, adjuncts time be multiplied by a multiplier that would put you past 30 hours a week. And so, some of our organizations' work includes bills that would, enable this to happen, or working directly with institutions to say, look, adjunct should be, considered time specifically for the purposes of PSLF, just so that they would be able to access this loan forgiveness. So that is, something to consider moving forward too.
Great, thank you, Amy and Scott. Next question. I was a government worker while attending school. How can I take advantage of the in-school forbearance waiver?
So
Go ahead, Amy.
well, I'm not aware of anything called the in-school forbearance waiver. So when you're in school, typically you're placed into in-school deferment, and in-school deferment is not, that time in in-school deferment is not currently counted under PSLF. So unfortunately, I don't think that you'd be able to get that time to qualify, even if you are working for a full-time employer.
I agree with Amy on that. If you're specifically listed in school, or in your grace period of your loans, you do not receive credit for the PSLF program. The department did announce recently that if you had just had a traditional forbearance period of 12 consecutive months or greater, that they will review that to give credit for the PSLF program. But the in-school part of that question makes me think that that's not specifically what they're talking about.
Okay, great, thank you. Next one, this one's an interesting one. Just prior to the changes to the PSLF, I paid the balance of my remaining loans. If loans have already been paid, can I get reimbursed?
I don't believe that's possible.
Yeah, unfortunately, the waiver is not written in such a way to give it credit for something that you've already paid off. So congratulations on paying off your loan, but unfortunately there's no extra money coming back.
Okay, thank you. So the next question, I understand that certain kinds of deferments and forbearance might count under the one-time account adjustment announced in April. Is there a particular deferment code we should look for in our loan history on studentaid.gov to identify those periods? That's one question.
That I don't know about the deferment codes, but just to reiterate on the guidelines around the IDR account adjustment, time spent in forbearance, that is 12 consecutive months or over 36 cumulative months, will be counted, and so will deferments before the year 2013, and that this IDR account adjustment will increase your eligible payments for PSLF, and it will only increase the credits that you have. It will not decrease them, so it is only a good thing. But the Department of Education has said that they will not be conducting this audit any sooner than January 1st of 2023. So there is some time, but also you, if you have a commercial FFEL loan, you'd need to consolidate in order to benefit from the IDR account adjustment, which you already would have to be doing if you're seeking PSLF. But just throwing that out there, some of the guidelines on that.
Thanks, Amy.
And I just recommend to that person, contact your student loan servicer. They might be able to give you more up-to-date information on which of your payments and forbearance might get credit for the PSLF changes.
Thanks, Scott. Okay, so I'm going to combine these next questions. This first one I think is pretty easy. What happens if I worked full-time and part-time for a qualified employer over a 5-year period? I think if you worked full-time and part-time, so whether maybe you worked full-time for a qualified employer, so like a 503c, and part-time for maybe not for a for-profit business, full-time is again 30 hours, average of 30 hours a week, should qualify you. If you're only working part-time for a qualified employer, it would not count. You may have 2 part-time jobs for 2 different qualifying employers, and that would count. The other question is, what if I volunteered for a nonprofit? Does that qualify?
To address the first question, the other thing I would add in there, and I think you got most of it there, is that you would not get extra credit if for some reason both the full-time and part-time job were both with a qualified employer. So you would still have to get 10 or 120 payment months worth of that because it has to happen at the same period. So you can't push that forward. Volunteers, again, are differently because they're not employees of the organization, so they don't qualify for the PSLF program that way. Also, volunteers, I'd be shocked to learn that there was someone volunteering 40 hours a week for a nonprofit for 10 years. But in general, you do have to be an employer of a qualified organization.
Okay, great. I know we're past the hour, but I'm going to go through these very quickly. There's only a few questions left. How will the October 31st waiver deadline impact people who are just short of the 120 payment requirement?
This is a great question. Oh, sorry.
No, go ahead, Amy.
Okay, thanks. So yes, so you have to submit all of your paperwork by this deadline in order to take advantage of the waiver. But it is possible that you won't have 120 qualifying payments by that deadline. It's okay. The purpose of the waiver is really to get those retroactive credits that you couldn't get under normal program requirements. And so if you have 5 years worth of payments, it's still worth it to submit under the waiver so that you can get those 5 years towards PSLF loan forgiveness, and then you can continue to accrue the rest of your credits after the deadline for the waiver. So this is really just about getting those retroactive credits that you would put you closer to that 120 credit amount.
And I would note here too that there's probably people out in the audience who don't currently work for an eligible employer, and that they should still try to take advantage to get credit for those past periods, because it does not have to be consecutive. So they might end up, at the end of that October 31st deadline with something like maybe 8 to 9 years of credit, and then they could decide whether it would be worth it to go back to a nonprofit employer to get the rest of the credit and get their loans forgiven rather than staying at their current job. So just because you don't currently have that employer that qualifies doesn't mean that there's not some payments in your past that you would get credit for based on what your employment history is.
Great. That's really great distinction. And so basically it's the waiver deadline is October 31st. That gets you into the public service loan forgiveness program. And so as long as you have direct loans and you're in the public service loan forgiveness program, you can continue, again, while you're being employed with a qualified employer, you can continue to make those payments till you reach your required number.
The only thing that will change at November 1st is you can't get past payment credit. So you can definitely still join after November 1st and continue going forward with whatever you've already had, or if you've not had any payments at that point, you can just start then and plan to work for 120 payments at a qualified employer. Only thing that changes that November 1st deadline is no longer eligible for those past payments.
Awesome. Thank you, Scott. Thank you, Amy. All right, last two questions. Can you address how consolidation loan interest rates work? I think we talked about this one. I have low interest rates now, and I'm afraid my payments will balloon. So your payments shouldn't balloon, but what will happen is all of your loans, when you consolidate into a direct loan, it'll take the interest rates, and I believe it's an average of them. It'll average them out, and it'll average them up to the nearest eighth of 1%, right? So I'm not going to do the math here, but basically your interest rates could go up. If you actually have all the same interest rates on your different loans, your loan interest won't change. But if you have multiple loans and your loans are all across the spectrum, you might have loans that have really high interest rates. Those might actually go down. You might have loans with very low interest rates. But again, your interest rates get averaged to the averaged up to the, let's see, the eighth of 1%.
And for people like that, I would also recommend contact your loan servicer. They can walk you through what it would turn out to be at the end, and they can walk you through what the various repayment plans could end up in payments for you, so you can make the right determination for you on whether or not you should consolidate your loans and take advantage of PSLF, or whether or not you might be able to pay off your loans at the end of 10 years anyway.
Yeah, and
this is, oh, sorry. And during the consolidation application process, this is another reason to really scrutinize the repayment estimator tool to make sure that you understand the interest rate and what those different payments will look like. And I should also mention here that we have a resource called ForgiveMyStudentDebt.org that runs through short videos on how to apply for the waiver. So that's also another resource for people if you need more help.
Thank you, Scott. Thank you, Amy. Okay. Last question. Okay. I believe I saw a slide that had a bullet point that said if anyone had individual loans and then consolidated them, they'd lose their credits. But now we're getting information on how to consolidate. So should we consolidate or not? Okay. So basically, we had a slide that had a bullet point that they may lose credits if they consolidate loans. Can we clarify that?
Mm-hmm. Under the traditional PSLF requirements, if you had been making payments with the understanding that you'd get PSLF credit and then you consolidated, you lost all of those credits that you had gotten up to that point. If you do it during the PSLF waiver or you previously lost that credit, the PSLF waiver will go back and allow you to get credit for those periods of time that you may have lost because you consolidated. So that's why it's important to do everything by that October 31st deadline so you can get credit back for those periods of time and get into the right loan you need for the PSLF program.
Okay. I know there were a lot more questions. We're definitely way past the hour. So I do want to, I will say that we're going to take any questions that we did not answer in the chat. I have an entire working group that is dedicated towards helping student loan borrowers. They're across the spectrum, so they're government agencies, nonprofit organizations, legal firms, all different expertise levels, and we try to answer these questions and get back to you. So if your question you submitted through chat does not get answered right here, it's okay. We'll get back to you as soon as we can. For now, I do want to say that thank you, Scott Filter from the Consumer Financial Protection Bureau. There's some contact information there if you want to talk to him, talk to his team. Also send him any information or ask him to present at any of your events. I also want to thank you, Amy Sulata from the Student Borrower Protection Center. They also have an email right there, and please feel free to contact them as well. From the DFPI, we have Selena Damian, who is our student loan ombudsperson. Her email address is there. Feel free to contact her if you have any issues with your student loan servicer. And we do have a mailing list. The DFPI has a mailing list that you could subscribe to. We'll talk a little more about that right here. So again, I want to highlight the student borrower resource or webpage that the DFPI has put together. There's also a fantastic website if you want more information on the public service loan forgiveness, the entire process, FAQs. It's all on the forgivemystudentdebt.org website. Again, great website, great resource. Finally, from the CFPB, we have their different tools and guides. There's a link to there. There's also a link to subscribe to the DFPI communications, things like consumer alerts, press releases. You can, alerts and more information about student loan webinars and events that we do. Please subscribe using that link there. And the CFPB has a podcast and a mailing list that you can sign up for. There's a link on that page as well. And finally, if you do, worst case scenario, if you can't get anywhere, can't get any notification, can't get any answers, feel free to contact the DFPI at outreach@dfpi.ca.gov. I have a team that manages that inbox, and we can forward your email to any and all the organizations that we have contact with. With that, I want to say again, thank you, Scott, and thank you, Amy, and thank you everyone for attending this webinar. This webinar is recorded, and it will be published onto our YouTube channel. The slides will also be made available, and it will be sent to you. Again, thank you, everyone, and have a great day.